Well, welcome everyone to another exciting class in which we want to bring to you some new buyer incentive loan programs. Did homeownership get easier? Uh, Tony Marino, branch manager of Guild Mortgage, is joined us, and we thought it would be very important that we bring to you one of the newest loan programs that's providing buyers with less cash that they have to bring to closing and a lower monthly mortgage payment than what was previously. We were finding that a lot of our buyers were gravitating and qualifying for the IDA program, the Illinois Housing Development Authority program. And so in this class today, in this presentation, we're going to be comparing and contrasting what's called the Fannie Mae HomeReady First program, which is the newest program out there, versus the IDA program, so you can compare and contrast. And then at the very end, we're going to show you some of the other programs that are out there. We're not going to go into great detail because we really want you to focus on and lean into the particulars of this Fannie Mae HomeReady First program versus the IDA program. Two very, very important programs. You're going to see cash needed at closing under both programs. Both programs, if you have any prospects, again, what is the opposite? What is the opposite of owning? The opposite of owning is renting. And when you rent, you have to come up for the landlord with at least your first month's rent and a security deposit. And we're going to give you an example in this class today of a $300,000 home. Whether you purchase it or if you rent it, renting is about $3,000 a month. So you must have in the bank $3,000 in your first month's rent. You must have $3,000 in a security deposit. So you have about $6,000 in the bank. And to so many, they feel like, well, that's not enough for me to become a home owner, home buyer. So just, show me a rental unit and I'll be happy with that. Well, we're going to show you that, those that have their first month's rent and their security deposit, Tony has great news for them that they can become homeowners for less than that first month's rent and that security deposit. So without further delay, let's get into this new buyer incentive loan programs. Did homeownership get easier? A little bit about Tony. He's the branch manager for the Marino team in Naperville for Guild Mortgage. He's a loan originator. He's licensed in Illinois, Colorado, and Florida. He specializes in getting people into home ownership using down payment assistance or these specialty loan programs. And he uses education. It's very, very important that we educate people, help them understand how much cash is needed at closing. What is your monthly payment? How does that compare to rent? How much is that compared to the first month's rent and security deposit you're about to give to the landlord? So we can help them become homeowners and own a part of the American dream. Well, the American dream is still alive and well, and buying a home can be an exciting yet an intimidating process. You're buying your biggest asset that you're going to have on your financial statement, and it's also the largest loan that you're going to have. Tony and I believe in the American dream, and we feel most people still do, but they're unsure as to whether it's achievable anymore with these rising interest rates. We've seen for the last several, throughout most of 2023, the Federal Reserve was raising interest rates to try and curb inflation. Well, when they raise interest rates, it also rose the mortgage rates. And we saw people going from 2% and 3% mortgages. They started to go up to 6, 7, above 7% in interest rate. Well, again, what did that cause? It caused the seller market shrunk quite a bit. Why would someone, if they didn't have to, give up a 2 or 3% mortgage, knowing if they sell, they're going to have to then buy and take on a mortgage at 7%, more than double what their current interest rate is on their current loan. So again, they did not want to double the amount of interest that they'd be paying. So a lot of people are staying put. The seller market is smaller, yet the buyer's market is still, even though there's higher rates, those that can qualify, the buyer's market is bigger. Think of them as balls. The ball or the pool of buyers is still bigger than the ball of sellers. When you have that relationship of more buyers than sellers, you're going to have multiple offers when good houses come to market. You're going to have, when there's multiple buyers looking to buy a smaller pool of homes, you're going to see that prices go up. So we're in an environment where it is a seller's market. Housing prices continue to go up, and we have multiple offers being made on housing. Tony, is that something that you have seen, with a lot of your clients?
Yeah, all of them have been making offers on homes, and they're all multiple offers.
That makes total sense. So this webinar is to provide you with information that will help your clients qualify for some of these specialty loan programs, help them understand that if they have a first month's rent and a security deposit, they can become homeowners and they can get some down payment assistance. So this helps clients then, once you educate them, once you show them that if they have a first month's rent and security deposit, that they could be in a position to actually dream of home ownership. So what is happening in the real estate market today? Well, we just talked a little bit about it. It's still a seller's market. The pool of buyers is bigger. Yes, certain people have fallen out. The affordability factor is not there for many people. When it's at 2 and 3%, more people could qualify. When it's at 7%, fewer do qualify, but the fewer is still more than the pool of sellers. As Tony mentioned, there's multiple offers being made on available homes. So you need to position your buyers to be in a position that their offer gets accepted by these sellers. There is a need or a want to become a homeowner for those who get educated, that they can own and not rent for what they pay for first month's rent and security deposit. Again, if you were to ask the average renter, well, I have my first month's rent and security deposit, do you think you can become a homeowner with that? They'll probably tell you no. But the answer is yes. You as realtors, we as lenders need to educate. And you're going to see some worksheets that we can make available to you through Tony. For you, Tony can provide it, you can provide it to them, of how they can become a homeowner, and showing them how much cash is truly needed in versus how much cash they'd have to come up with a first month's rent and security deposit. Too many of those renters, too many of the buyers out there believe that they need a 20% down payment. Again, a big fallacy. Many lack the confidence of becoming a homeowner. Many think that they're years away from owning a home. Yeah, I've got some money in the bank. I got that first month's rent and security deposit, but I'm years away from owning a home. 50% of the renters think they can't afford the down payment because they don't know about these specialty programs. They don't know about down payment assistance. That's where realtors, that's where us as lenders, we need to educate them. However, they have the financial means to maintain a monthly mortgage payment that's about what they pay in monthly rent. So if you have a renter, please use these worksheets you're about to see. Please use Tony as a resource to show them what it would mean if they use that first month's rent and security deposit toward down payment and closing costs. Many realtors do not educate their prospects on the financial assistance, the down payment and the closing cost assistance programs that are available to them. Perhaps there's a need for home buyer seminars. You'll see me bring this up now. I'll bring it up later. The easiest way to do a home buying seminar is not for a realtor to figure out, oh my God, I don't have the PowerPoint slides. I don't have the Zoom software. All you need is the email of prospects. If you made a list of people that you were inviting to your son or daughter's wedding, you'd probably come up with 200 emails. If you have emails, you can provide those to Tony. He will be your guest speaker. I will be your guest speaker. All you have to do is let us send out the invite. You get to use our Zoom software. We'll provide it. All the people that register are given to you as a realtor, and you get to follow up with them, as do we, to try to get them pre-approved, to educate them that their first month's rent and security deposit might be just enough for them to become a homeowner. So what are the advantages of home ownership? Well, it enhances the quality of life. It helps individuals with wealth building and equity appreciation. The difference between the fair market value of a house and their mortgage is called equity. And equity builds up every month as they continue to pay down, pay down, and pay down that mortgage loan. They're building and building and building equity. A home is a place of their own versus renting or living with parents. You don't get any tax deduction. You don't get any equity buildup if you're renting. You get stable housing costs versus rising rental costs. I continue to hear that, even with higher interest rates for mortgages, so be it with rental rates, that rents are continuing to, spiral upward. And it's also causing people financial hardships trying to find good rental places. Again, we talked about it builds equity, which builds wealth. You get tax deductions on the interest and the real estate taxes you pay. You get no tax deductions on your rent. You can borrow against the equity you build in your home. As you build up equity, you can get a home equity line of credit. You can build out that basement. You can finish that basement, remodel the kitchen, remodel the bathrooms by going out and getting a second or a home equity line of credit. Or you can convert it to cash later in a reverse mortgage when you retire. You can have the reverse mortgage pay you, just like Social Security, pay you on a monthly basis. And lastly, what are the advantages of home ownership? Well, homeowners have 45 times greater net worth than renters. And isn't that, we're all trying to accumulate more equity, more wealth, pass on to the next generation some of the wealth that we've accumulated. By becoming a homeowner as soon as possible, you're on that path toward building greater net worth. So who can use these specialty loan programs or down payment assistance? Well, renters, as we just talked about, existing homeowners, sons, daughters, millennials. I mean, Tony and I both know people that are current clients. They have 2 and 3% mortgages. They're not going anywhere. They like that mortgage interest rate. Yet they have sons, daughters. 2 of my daughters already have become homeowners. Both of them have used down payment assistance. It's there, even though you have clients that already own. As a realtor, you should be asking them, do you have any sons or daughters that would like to be educated on how they too can become a homeowner if they have at least the first month's rent and security deposit? And sometimes, just sometimes, mom and dad help provide them with that first month's rent and security deposit, which then we can use toward down payment and closing costs. Family members that dream of home ownership, brothers, sisters, mom, dad, grandma, grandpa, they all can become homeowners, can use down payment assistance and specialty loan programs. Friends of ours, my daughter bought a condo in Chicago, and soon it became a snowball. Then another friend and another friend wanted to do the same thing, no longer wanted to rent, but wanted to become a home owner. Anyone who thinks they can't buy a home because they did not save enough money, and anyone who's interested in buying a home for less than 1 month's rent and security deposit, which again, we're going to show that to you in numbers in a little bit. So buying a home is a huge step, but buying a home doesn't have to be that challenging. Again, if I had to talk about what are the 2 things that keep people becoming homeowners, it's not having enough money for the down payment, and the other is credit score. Well, if you can fix your credit score with Tony through credit repair, and if you can work through these specialty programs that give you down payment and closing cost assistance, you can take that big step toward home ownership. So what if we can help with the missing down payment? Well, then it helps an individual overcome that financial barrier to home ownership. They think they don't have enough money in down payment. Well, we'll provide that to them with these specialty down payment assistance programs. Financial assistance is typically in the form of down payment and closing cost assistance, and Tony and his team can provide you with that access to such programs. So let's get into one of the newest and one of what we believe is one of the greatest new buyer assistance programs. Well, the first one is this Fannie Mae HomeReady First. Let's walk through it slowly, lean in a little bit to this. It provides assistance of $6,500 toward down payment and closing costs for first-time home buyers and repeat home buyers under the Fannie Mae HomeReady program, which is a 3% down program. So already, it's a 3% down program. it's $6,500 that they're going to get in down payment and closing cost assistance. At least one buyer has to be a first-time home buyer. So, say the husband or somebody was already a home buyer, he can be there. If the wife wasn't a home buyer previously, they would be ideal for this program. One of the key things is this program has no 1% origination fee. Unlike the IDA, the Illinois Housing Development Authority program, it has a 1% origination fee. This has no origination fee. This program has no area median income, AMI, no area median income limits based on where the borrower currently lives. So unlike in the IDA program, which we will compare shortly, that has an income limit. It's still high, but it does have an income limit. There is no income limit on where the borrower currently lives. The borrower can purchase wherever they would like, as long as they currently reside in one of the eligible MSAs, which includes, I'm going to say, Cook, Will, DuPage, Kane County, all of the collar counties around Cook County. There's parts of Illinois and Wisconsin nearest Chicago that are also included in this eligible MSA. Fannie Mae will contribute $5,000. Again, I go back here. It's where they currently reside. So if I live in Chicago currently, but I want to buy in Sugar Grove, let's say, as long as I live currently in one of the eligible MSAs, I can buy anywhere, which is very cool.
It doesn't include it. That doesn't mean all of Chicago, though.
Okay, so it's not all of Chicago?
It's specific to address.
Okay. And you have a lookup tool, don't you, Tony, that you can
Yes.
look up for realtors?
Yes. Yeah.
So
So it will give me if it's approved or not when I'm doing the pre-approval.
Perfect. So the moral of that is the realtor should contact you with their client. You can put in their address where they currently live and say, yes, they would qualify for this program.
Yeah. Yep.
Perfect. So again, once they qualify, Fannie Mae will contribute $5,000 and Guild Mortgage will contribute $1,500. The two together are $6,500 toward down payment and or closing costs. Plus, Fannie Mae will credit up to $500 toward the appraisal cost.
That's actually a lender credit.
Oh, it's a lender credit? Okay, so the lender will then credit up to $500 toward the appraisal cost. The credit score can be as low as 620 versus with IDA, you have to have at least a 640. So this gets more people into the pool with a lower credit score. Non-occupant co-borrowers are allowed versus under IDA, non-occupant co-borrowers are not allowed. So what does that mean? And that means that, let's say my daughter, if her income alone was not sufficient to be buying her condo, could she ask me as dad, I'm not going to live there, I'm a non-occupant, but could I be a co-borrower? Yes, under the Fannie Mae HomeReady First program. No, under the IDA program. So again, it opens up more possibilities for people to become home buyers because parents like to help out their children. And if they're willing to sign as a non-occupant co-borrower, now all of a sudden their child is in owning a condo, owning a townhouse, owning a single family because this program allows it. So in reality, the borrower has to bring less funds to closing, which we're going to see shortly. There's the comparison to IDA. IDA has three programs. Remember, it was $6,500 under the Fannie Mae HomeReady First. Under IDA, there's three programs. There's $6,000. See, it says forgivable. This $6,000 is forgivable over a 10-year period. You stay in the house for 10 years, you owe none of the $6,000 back. There is no interest on it. So there's no interest and it is forgiven. The principal is forgiven over 10 years. The second one is $7,500 deferred. It's a zero interest loan. I call it the crazy good program because how crazy is it? IDA gives you $7,500. There is no interest, so there's no monthly bill for an interest payment. There is no monthly principal payment. It's deferred for 30 years or until you sell the home. So if you sell the home in 10 years because you're moving up or you're expanding or you're downsizing, you then pay the loan back out of sales proceeds. And at that point in time, what do you owe back? $7,500. No interest, no other payment other than $7,500. So while you own and live in the house, you get the $7,500 and you never have to pay it back till you sell the house, or 30 years, whichever comes first. The last one under IDA is the $10,000, still zero interest loan, but the principal is to be repaid over 10 years. Well, what is 10 years times 12 months? That's 120 payments. When you divide 120 into 10,000, that's $83.33 a month. So a lot of times I tell my clients, what does it cost you if you took out your significant other for a dinner this weekend? They said, well, Glenn, it depends on the restaurant. It could be $60, $80, $100. I said, if you're lucky, it costs you that. So I said, so if you give up one of those dinners a month, you'd have $83.33, right? Yeah. Well, I can give you then, because that means you can pay $83.33, and I can give you $10,000 for a down payment and closing costs. And they go, talk to me some more. You're talking my language. So again, we're going to see how these play out as far as how little someone has to bring to closing then if you use one of these down payment assistance programs. So let's talk a little bit more about IDA and about the eligibility requirements. Well, it's available for first-time homebuyers and non-first-time homebuyers. There are income and purchase limits, which we're going to see shortly. But again, comparing that to the Fannie Mae HomeReady First, it is also available for first-time and non-first-time home buyers. However, one of the borrowers must be a first-time home buyer. Under IDA, you must purchase a 1 or a 2 unit. 3 and 4 unit properties are not eligible. Under the Fannie Mae HomeReady First, you can buy 1, 2, 3, and 4 unit properties. All are available. Number next, borrower must occupy it as their primary residence. No non-occupant co-borrowers allowed under IDA. Just the opposite under the Fannie Mae HomeReady Smart program. Mom, dad, brother, sister, they can be a non-occupant co-borrower. I'm not going to live in that house with my daughter, but I don't mind helping her, and I'll be a co-borrower, and that's allowed under the Fannie Mae HomeReady First. Under IDA, it's a 30-year fixed rate. It's either a VA, an FHA, USDA, or conventional loan. Under the Fannie Mae HomeReady First program, it's only a conventional loan. Still other qualifications. We're going to look at the income and property limitations shortly for IDA. There is no income, there is no property purchase price limit up to the maximum of like $766,000, which we'll see that shortly on another slide when we talk about the Fannie Mae HomeReady First. Minimum credit score under IDA, 640 and 640. What's the minimum credit score under the Fannie Mae HomeReady First? 620, strictly conventional. The max debt to income ratio for IDA is 45%. Under the HomeReady First program, you just have to get what's called automated underwriting approval. It's called DU approval. And Tony, have you seen ratios go beyond 45% under the Fannie Mae HomeReady First?
Yes.
Okay.
But IDA did change. We can go to 50% now. They just have to take a different course, but they also need to have a 680 credit score for FHA, USDA, VA.
Got it. So this 45 can expand to 50 under IDA, but you have to
Possibly. Yeah.
with
As
a
long as
six.
they have a higher credit score.
Yet we can keep the 620 score. And again, if you have higher than a six, the higher the credit score, the better chances you have of this expanding up to 50% under a conventional loan with the Fannie Mae product. The borrower must contribute 1% of the purchase price or $1,000, whichever is greater, under IDA. Under the Fannie Mae HomeReady First program, there is no minimum contribution. You got down payment assistance coming in from Guild Mortgage and from Fannie Mae, $5,000 and $1,500, $6,500 in total, and the rest of it could be gift. It would not necessarily have to be their own funds. Again, another reason that someone could stop renting and become a homeowner if they were able to get, say, mom or dad were willing to help them with it, and mom and dad were willing to gift them funds. And under IDA, there is home ownership counseling required. It can be done online, and the certificate has to be handed in. The interest rates under IDA, there's only one interest rate each day. IDA produces, IDA distributes to lenders like Tony today's rates. We're going to see what they are on the next slide. And that is the rate for the borrower's first mortgage on the FHA, conventional, VA, or USDA. The IDA down payment assistance is a second lien, meaning the 6,000, the 7,500, or the 10,000 under IDA. That is a second lien on the property, with only the $10,000 program requiring a repayment of how much? $83.33. That's on the $10,000 program. That's for the repay just principal. There's no interest charge. The 7,500, no monthly payments at all. The 6,000, no monthly payments, and it's forgiven over 10 years. Here's some of the interest rates as of yesterday. The forgivable is the 6,000 on the $6,000 program. The government would be, say, an FHA. This would be the conventional, but the government, the FHA, would be 7.375 on the 6,000. On the 7,500, the rate would be 7. And on the 10,000, where you're paying $83.33 a month, it's a 7% interest rate. These rates are about, I'd say, a quarter to 3/8 lower than what you might get without going through the IDA program. Here is your income and purchase limitations. So in this MSA of Cook, DuPage, Kane, Lake, McHenry, McLean, and Will, the maximum income limit is $132,360. What does that mean? That means the borrower has to make less than $132,000 in order to qualify. Well, again, if I use just raw numbers of 3 times, 4 times that number is probably the maximum that mortgage that someone can buy. That's a big number. That's 3 times 132 is close to $400,000. I know a lot of people and realtors. I'm sure many people that make less than $132,360. So in my opinion, almost everybody that we meet qualifies income-wise because the borrower makes more than $132,360. So if I had a husband and a wife team, if he made, let's say, $100,000 and she made $50,000, the household income is $150,000, adding the two together. But if we don't use the wife as the borrower and we just use the husband's $100,000, then they would qualify because the borrowers, that income limit is by borrower, not household income. So if the borrower is making less than $132,360, they qualify. Same thing on the purchase price here in Cook, DuPage, Kane, Lake, McHenry, McLean, Will. A single unit, one unit, a house, a townhouse, a condo, up to $581,000. Well, that's a decent purchase price for somebody who, wants to stop renting. In fact, I know most of them won't purchase something that big. So again, I think everyone that realtors who is thinking of stopping renting and becoming a homeowner. Income-wise, they're going to qualify because they're going to make less than 132,000, and their purchase, what they're looking to purchase, is not going to be over 581,000. So they're going to qualify for either 6,750 or $10,000 in down payment and closing cost assistance. FYI, on a 2-unit, they can go as high as $716,000. And again, even if the rent was, $1,000, $1,500 on a second unit, that number could be deducted from what they might pay in a mortgage payment, and that would really, really reduce what their out-of-pocket is on a monthly basis. So again, IDA only does 1 and 2 units, does not do 3 and 4. The Fannie Mae HomeReady First program does 1, 2, 3, and 4 units. So how can we structure a home purchase using these 2 down payment assistance programs? Let's look at the 3 buckets of cash that are needed at closing. So this first one is the IDA Down Payment Assistance Program. Again, lean into these numbers a little bit. So if our client was looking at a $300,000 purchase, we picked the FHA 3.5% down. We're going to go for the maximum, the $10,000. Remember, there's $7,500, there's $6,000. We're going for the $10,000 down payment assistance. The average closing costs are $5,500. Plus, remember, we said that the Fannie Mae HomeReady First does not have an origination fee. However, the IDA program does have a 1% of loan amount origination fee. So what does all these numbers mean? Let's look at rent versus purchase. In renting about a $300,000 house, the rents are going to be on average around $3,000. If you're looking at a 3 or a 4 bedroom would probably be more, but if you're looking at a 3-bedroom, you're looking at $3,000 in first month's rent, and you're looking at a $3,000 security deposit. You're looking at, and you're saying, I've got $6,000 in the bank, but I hear that there's down payment, and if I buy, there's closing costs, and if I buy, there's escrows. I don't have all that money, so let's just rent. I've got the $6,000. And this is where the education comes in, realtors. You need to have this worksheet given to the client via Tony, via you. Again, you can get this with your picture and your phone number and your contact information placed right here in the upper right corner next to Tony. And you can be handing this out to clients to show them how easy it is to become a homeowner. But let's finish off with IDA on the purchase. Every purchase, every purchase has 3 buckets of cash. Bucket 1 is called down payment. Bucket 2 is called closing costs. Bucket 3 is called prepaid/escrows. So let's look at it. If the down payment was 3.5% on a $300,000 purchase, the down payment is $10,500. You always have to ask who pays. Under IDA, 1% of the purchase price has to be the borrower's own funds. So there's $3,000. 1% of 300,000 is $3,000. We need $10,500, so we need another $7,500. We get that from our $10,000 down payment assistance because we had better than a 640 credit score and we made less than the $132,000 number. Cool. So we got these 2 numbers added together, 3,000, 7,500. We got the 10,500, put a check mark. We got all of bucket number 1 covered, and our client is only out of pocket $3,000. Let's go to bucket number 2, closing costs. The closing costs on average are about $5,500 plus another 1% of the loan amount, $2,910. So it's $8,410. Okay, who pays? Well, let's finish off. Let's first put in the down payment assistance. We still have $2,500 left over from the $10,000. We only used $7,500 in bucket number 1 for down payment of the $10,000, leaving us $2,500 as the remainder of our down payment assistance. Great. If the realtor can negotiate for the client that they would get about $2,000 from the seller toward closing costs, great. That would be another plus toward covering these closing costs, which then would leave us with $3,910 that the borrower has to come up with out of pocket. Now, let me back up here. The seller giving $2,000. If that was not something that the seller was willing to do upfront in the very beginning of negotiations, once you realtor representing the buyer have created what I call the table of expectation. House started out at 305,000. You offered 295. You guys came to terms at 300,000. You, the buyer's agent, are inking the contract to be tendered over to the seller for them to accept the offer. Except that you call up the seller's agent and say, guess what? My client no longer wants to pay 300,000. And they go, come on, we just finished negotiations. You say, nope, my client wants to pay $302,000, not 300,000, provided that your client pays $2,000 toward their closing costs. Well, they take out their calculators, they talk to their attorney, they go, 302,000 minus 2,000 is 300,000. Well, that's what we had agreed upon. So they're fine with it. The seller is going to be just fine with it. So again, all you have to do when you use that technique of upping the purchase price is to make sure that you feel through CMAs that the property will appraise not at 300, but that it will appraise at $302,000. Last bucket, prepaids, escrows. The cool thing here is that you will escrow, depending upon the month you close in, anywhere from 2 months to 8 months worth of real estate taxes. You will escrow 3 months worth of homeowners insurance. But the key here is in Illinois, we pay our real estate taxes 1 year in arrears. So in the year 2024, we're really paying the 2023 taxes. If our closing is, let's say, July 31st, who lived in the house from January 1st to July 31st of 2024? Seller. Seller owes your client 7 months of real estate taxes as a credit at the closing. So if you look down here, it says real estate tax credit from the seller. The credit always exceeds how much is going into the escrow. It's really a negative number, but I don't like to show that. So this is just a zero. The real estate tax credit, be it 7 months, be it 8 months, be it 6 months, depending upon the month you close in, that credit will always exceed what the lender wants set up in the escrows to pay future real estate tax bill and homeowner insurance premiums. So let's summarize. Down payment. The client was out $3,000 because IDA provided the remaining funds. In bucket number 2, they came up with $3,910 because IDA came up with $2,500 and the realtor negotiated $2,000. So again, $3,900 only out of pocket for the $8,410. And last but not least, for escrows, 0 because of the real estate tax credit. So the client came up with a grand total of $6,910, or they can come up with $6,000 for the security deposit and first month's rent. Which do you think they would rather come up with, $6,000 or $6,910? Would they rather be a renter, or would they rather be a homeowner of a $300,000 home? I know my client would probably say, please continue showing me how I can become a homeowner. Now, bear in mind, keep the numbers in your head. $6,900 is what they had to bring to closing under IDA, and they got $10,000 in down payment assistance. Now let's look at the same thing under the Fannie Mae HomeReady First. Same thing, $300,000. Under the Fannie Mae, it's a 97% loan program, so 3% down. The assistance, remember we said, was $5,000 from Fannie Mae, $1,500 from Guild Mortgage for a total of $6,500. The average closing costs were $5,500. And only under IDA do you have the origination fee. This is really 0, but I just wanted to show it to you because we're not going to include it. So when we now look at, on the rent, he still has to come up with, and he still has in the bank his first month's rent, he still has security deposit. Your client has $6,000 in the bank. But now all of a sudden, the down payment for bucket one down payment, 3% of 300,000 is 9,000. So who pays it? Let's make the wild assumption that, in the contract that you put together representing the buyer, that there's $3,000 that they're going to put a 1% down for earnest money. That means then that the down payment assistance of the 6,500, we need 6,000 of it. 6 and 3 is 9. Put a check mark. We got all the money for the down payment. Second bucket is 5,500. Who pays that? Let's finish off with the down payment assistance. Of the 6,500, having used 6,000 in bucket one, we have $500 still remaining. If we do the same strategy of saying, hello, selling agent, my client no longer wants to pay 300,000, he wants to pay 302,000, provided that your client pays $2,000 toward closing costs. So now you got $2,000 coming from the seller. And remember, there's a lender credit of $500 that's going to reduce this 5,500. You're going to get a $500 credit for the appraisal under the Fannie Mae HomeReady First program. So that leaves in yellow, that leaves that there's $2,500 that the borrower needs to come up with for closing costs. Same thing applies on bucket number 3 for prepaids and escrows for the real estate taxes and the homeowners. If we close July 31st, the seller has to give our client 7 months of real estate taxes as a credit, real estate tax credit. The credit will exceed any amount that the lender's calling for to be held in an escrow for future real estate taxes or homeowner insurance premiums. So what is our client out of pocket to purchase this $300,000 home using the Fannie Mae HomeReady First? $3,000, $2,500, $5,500. That is less than the $6,910 under IDA. Versus, well, they could give the landlord $6,000, give them the first month's rent, give them a security deposit. Don't wealth build, don't build any equity, just stay a renter. And remember, they only needed a 620 credit score for this program versus a 640 program under the IDA program. Again, this is by far, in our opinion, a better program. If you have any clients, the first thing you want to do, because Tony's got what's called a Fannie Mae lookup tool, is give Tony the address. He looks it up in the Fannie Mae database, and it'll come back and say, oh yeah, they currently live in an MSA that is eligible in the Chicagoland area, and now they can buy anywhere and use this program. And there's no income limitation. So this is really a cool program. And you can go up to, I think the max loan amount for a conventional loan is something like $766,000 and change. So round number is $766,000. Again, I do not anticipate that those who are going from renters to home buyers are going to buy a home for $766,000. But it just goes to show you, everybody that you talk to, everybody that's a renter, this is their first stop. You want them to go through the lookup tool with Tony, find out if they qualify, because it's the least out of pocket, and they will thank you multiple times because they could have given up the money to the landlord, but instead you helped get them into a home for less than their first month's rent and their security deposit. So what is your housing payment? Well, let's again go back to the IDA program. It's an FHA loan. So the home was at $300,000 of the purchase. The loan amount is $294,566. We're using the $10,000 zero interest loan. It does have an $83.33 down payment assistance payment every month. The principal and interest on $294 is $1,960. The real estate taxes on a $300,000 home, as you all know, each home is a little different for real estate taxes, but it's about $553. Homeowners insurance, $1,200 a year, $100 a month. Private mortgage insurance, $204 a month. When you add these up, the monthly payment is $2,900. This assumes a 7% interest rate on an FHA 30-year fixed with a 3.5% down payment, just like a previous worksheet showed. It was a 3.5% down payment. They're paying less than what they're paying per month. I think a renter would pay more, close to it. If you said, oh, your payment is $3,100 on your mortgage, but your rent is 3,000. I think they would want that backyard and the fence and the dog running in the backyard versus just being a renter. Let's take a look now and compare this to the HomeReady First loan. Okay, it's 3% down on a $300,000 home, so the loan is $291,000. So the principal and interest is $1,936. It's not an IDA loan; it's a Fannie Mae loan, so there is no $83 a month. The taxes are still $553. The homeowner's insurance protected against fire and damage is $100 a month, and the PMI is $192 a month. When you add this up, it's $2,781 versus $3,000 in rent. Again, realtors, if you showed this to one of your prospects and said, would you still want to rent? Or would you rather have a monthly payment less than what you're paying in rent? Or would you, or again, or would you want to give up $6,000 to the landlord? Or would you much rather, put that into down payment and closing costs, and I can get you in for less than the first month's rent and security deposit? So again, this assumes a 7% interest rate on a Fannie Mae HomeReady First 30-year fixed with 3% down. And I always ask in each of these examples, what if this was a 2 flat and you had a second unit? And even if it was paying, the second unit was paying, pick a number, $1,000 a month. Subtract that from $2,781. So your client's paying $1,781 a month to live in their unit. And in the second unit's giving them income of $1,000 a month. Pretty cool. So let's summarize. The 3 buckets of cash: down payment, always ask who pays. In bucket number 1, down payment, you can pay it, meaning borrower, and or IDA or Fannie Mae and Guild can pay it. IDA can go up to $10,000, $6,000, $7,500, or $10,000. Fannie and Guild can go up to $6,500. There's 3% down is the conventional loan with high credit score, or when using the Fannie Mae HomeReady First, you can get it with a score as low as 620. You can do 5% down on a conventional loan with lower credit scores to 620 and not using the HomeReady. You can do 3.5% on a Fannie Mae FHA loan at any credit score down to 580. And you go as low as 1% as your share if you use the IDA down payment assistance of $10,000, $7,500, or $6,000. But again, don't be confused. Again, if you use the Fannie Mae HomeReady First, your client will have less out of pocket than if they used the IDA program, because again, this is 1% that they're putting in. We recommend that under the 3% HomeReady First program, that they still come up with 1% of their own funds as the earnest money, and the rest of it can come from Guild Mortgage and from Fannie Mae, the $6,500. Bucket number 2, closing costs. Always remember who pays. There's $5,500 in normal, customary, and ordinary costs. There's an additional 1% fee if you're going IDA. Who pays these fees? Well, again, the borrower can pay, or you can have IDA or Fannie Mae and Guild pay, and or the realtor can negotiate the seller pay if the seller agrees outright, but that's kind of not the environment that we're in. It's a seller's market, we said at the beginning. So they're not necessarily interested in seeing upfront that you, the buyer, want, or the realtor who's representing the buyer wants the seller to pay for closing costs. But you can always ask for them to pay $2,000, $5,000 more for the seller's home, provided the seller pays $5,000 of your closing costs. And the ask for here should be provided that the realtor feels the appraisal can go up $2,000, that it won't, that appraising at $302,000 instead of $300,000 is within the realm of real possibility. Your lender can pay some of the higher interest rate, with a higher interest rate on non-FHA, non-IDA loans. So what I'm saying is there was one interest rate on IDA. There's a ladder of interest rates on the Fannie Mae HomeReady First program. So if you want to get a lower interest rate under the Fannie Mae HomeReady program, your client can pay points, can pay fees to lower the rate, which will lower the monthly payment. So again, you have to ask how much of your own funds were used for closing costs? Well, again, bucket one, we said for down payment, we're using about 1% of our own funds, and that was for the earnest money. On bucket number two, it's largely Fannie Mae and Guild paying $6,500. The seller was paying $2,000, and there was about $2,500 left over that our client had to pay out of pocket. Bucket number three was the prepaids and escrows. Who pays? Again, the lender is going to want to escrow for 2 months of homeowners, 2 to 8 months of real estate taxes. But because Illinois pays real estate taxes in arrears, the seller credit for real estate taxes while the seller lived in the home from January 1st to July 31st, in our example, gave our client, the buyer, 7 months worth of real estate taxes as a credit. The credit always exceeds these escrows that the lender wants to set up. So this bucket is always zero, except on new construction. And I won't go into that right now, but very few are we finding are buying new construction. So in summary, how much of it is their own funds? Well, in bucket number one, it was 1% of the purchase price. It was $3,000. In bucket number two, it could be zero, or in the case that we had was say $2,500, where Ida was paying part of it, or Fannie Mae and Guild was paying part of it, and or the seller was paying part of it. So again, bucket number two could be as low as zero, but let's say it's $2,500. And then bucket number three is zero because of the real estate tax credit. So again, all three of these added together on every real estate transaction, when you use the Fannie Mae HomeReady First, is less than first month's rent and security deposit. So what are you waiting for? Let's take some action. You as realtors, we as lenders, now that you've reviewed how little cash is needed, what's your next step? Well, your next step, realtors, is to educate your prospects. This does not come by osmosis. This does not come by you just saying, oh, you can really afford to become a homeowner. They don't see it, they don't feel it, they don't touch it. You need that worksheet that went through all three buckets of cash. You need Tony to do the Fannie Mae lookup tool. So what you want is to get a co-branded flyer of the Fannie Mae HomeReady First program. That's one flyer. You should make a dozen copies and carry it in your briefcase. You should also get an Ida flyer co-branded with Tony and put a dozen of those and hand both of those out to your clients and say, if you need to attach a sticky to it and say, for less than your first month's rent and security deposit, and hand it out to everyone that you just invited to your son or daughter's wedding. They will thank you for going through the process, and make sure that, that they contact you. You guys can do a Zoom together with Tony, the realtor, Tony, the client. They love to be educated. They love to see their eyes brightened. They love the light bulb to go off and go, oh my God, we can become homeowners for what we're about to give to a landlord. So you can why don't you guys provide a monthly homebuyer seminar with Tony being your guest speaker, all via Zoom? So what do you have to do to do that? You just have to come up with the emails, which you already have in your databases, of all your prospects, of all your family, of all your friends, and invite them to a home buying seminar. It's that simple. Tony sends out the emails for you for the invite. Tony gives you copies of everybody who's registered for it. Tony has the PowerPoint presentation, and you're just the MC. You introduce, you say hi, you welcome everybody, you introduce your guest speaker, and at the end you thank everyone. It couldn't be easier. So your goal, your homework: start hosting homebuyer seminar using Tony's Zoom software and Tony as your guest speaker. Get your clients pre-approved for free with Tony. Get a free credit rescore if they're not at the necessary 620 or 640 score. Tony will help them assemble the necessary documentation, get an automated underwriting approval, get a pre-approval letter. Now that you have a yes, they can go shopping for a home, and they can review an action plan with Tony in the event that they don't have the necessary score. So again, we want to thank you. Pre-approvals in 24 hours. If you have any questions about helping people get into their dream homes, helping them dream of home ownership, not of becoming renters, contact Tony at the 847-804-1059 or oh, I got the wrong email in here, but I will change that. He is at Tony Marino at guildmortgage.net. I will change that when I send this out to everybody. And before we let you go, I want you to look at, I'm not going to go, we wanted to focus on the two majors, but I just want to tease you with some other really cool programs that are available through Guild. We'll just run through them real quickly. So hang in there for a quick second. Let's go to my Word document. We just went through the Fannie Mae HomeReady First. We went through the IDA down payment of $10,000, $7,500, and $6,000. There's a 1% down payment advantage program. It's customer only needs 1% down. There's a 2% Guild Mortgage Assistance. It's a grant. It doesn't have to be paid back. It's capped at $5,000. So again, in our $3,000 example, 1% would be $3,000 comes out of their own funds, and Guild would give $5,000. Again, $5,000 is nice, but you get $6,500 under the Fannie Mae HomeReady First, or you get $6,000, $7,500, or $10,000 under IDA. There's also what's called the payment advantage that comes with this, where you get a 1-year buy down where Guild pays 1% of the customer's interest rate for the first year. So kind of a very, very cool program. Again, Tony can look at this as an option to the Fannie Mae HomeReady First program. Another program is, and it's kind of a fun program, the 3-to-1 Home Plus. With as little as 3% down, the 3 represents 3% down. The client gets a $2,000 e-card from Home Depot, kind of a cool thing. Plus, they get anywhere from $500 to $1,500 toward closing costs, depending upon their income. So again, a little bit more money is needed here because they got to come up with 3% down, and they're only getting anywhere from $500 to $1,500 toward closing costs. But the thing is, if they do have the money, this is a cool program because they get a $2,000 gift card to Home Depot. Temporary buy downs, for some reason in these programs, if somebody feels like, hey, 7% is too high of an interest rate, I'd prefer something less. Well, there's something called temporary buy downs. They can buy it down in the first year. They can buy it down. 2-1 means in the first and the second year. A 3-to-1 means 3% down in the first year, 2% down in the second year, 1% down in the third year. These are all available to lower the rate, to lower the payment. Tony can go through those with your client. Buy Now Advantage, you have to have a credit score at least 680. It allows borrowers, homeowners, to compete with all cash offers by being able to write a cash offer with no financing contingency and no appraisal contingency. If financing is not placed by the escrow closing date, so by the closing date, if financing is not finalized by the closing date, Guild Mortgage will guarantee to pay cash for the home and provide final permanent financing to the home buyer. Won't go through the details at this point because we want you to keep focused on the IDA and the Fannie Mae HomeReady First program, but it is available, something that you can talk with Tony about. Here is Zero Down. It is a pairing of a Fannie Mae First Mortgage, not Fannie Mae, FHA First Mortgage at 96.5%, with a 3.5% or a 5% repayable second. There is income limitations, but again, the update to this program, the program no longer requires an area median, so there's no income limits, and the credit scores have been lowered to 600. If you're only looking for 3.5% second mortgage, it is a forgivable second with zero interest, forgivable after 36 months consecutive on-time payments. Kind of a cool thing. If you're looking to use only 95% down and get a 5% second, it is a repayable second if you want 5% in a second mortgage. amortized over 10-year with an interest rate that's the same as the first. Tony can go into greater detail. Again, kind of a cool thing if somebody is buying a fixer-upper home and they're going to do an FHA 203K, we have what's called a Green Smart Advantage program where the borrowers can purchase their new home and include the cost of appliances. How about this? How about a refrigerator? How about a washer? How about a dryer? How about a dishwasher? How about a smart thermostat? They can add that into their FHA 203K loan and get 96.5% of these appliances financed. So in other words, they're only coming up with 3.5% of what the cost of these appliances, and the loan carries the rest of the purchase. Kind of a cool thing. Won't go into greater detail. Tony can do that later for you. So again, we got things like lock and shop, where you can lock in your interest rate for 120 days, credit approval protection, shop with confidence. We stand behind your credit approvals. We'll pay up to $5,000 in earnest money and $1,000 for any inspection and appraisal fees if we can't close your loan due to our error. There is a 17-day closing guarantee program, and we have a payment protection program where, again, you don't have to wait for the interest rate to come down to purchase your next home. Buy today, refinance later, and we will waive the lender fees. How about that? So I think that's a good stopping point. Again, going back to our PowerPoint here. Any questions, comments, concerns? Tony is no longer with First Centennial. He is with our good Guild Mortgage, and his email is tony.marino. And I can just change that while we're here. So let's go here with Guild Mortgage. Guild Mortgage bought out First Centennial. That's why you still see some of the prior company reference. And what we'll do here is we'll give you Tony's current email at tony.marino@guildmortgage.net. Any comments or questions?